All right, Matt the Mortgage Guy here, recording a video to talk about, are mortgage rates headed down? Will they continue to head down? Are they going to reach new all-time lows? These are the questions I get asked on a daily basis. I want to record a video because I don't want people to get lulled into thinking that rates will continue to stay low forever, or get greedy when they see a little bit dip in interest rates and say, well, they're coming down, they should probably continue to head down, and I'm going to wait until they hit the absolute bottom. So in this video, I'm going to share what's happened over the last couple of weeks, what's happening today, what I expect to happen in the future, what I would do if I were you, if you're purchasing, refinancing. Again, just some guy on YouTube. NMLS number 1088993. I am a licensed mortgage professional, but like most people, I do not have a crystal ball, so I can't tell you exactly what's going to happen. This is just my thoughts based on what I see. So let's get into it. I found a pretty cool chart that shows the historical rate average, even though this whole website's just built to kind of funnel you in to get you to refinance. At least they've got some cool metrics. And you can see how rates have continued to come down over the last couple of years. And then this was January, February, where we saw what you would call the bottom before this big uptick mid-February, where everybody lost their minds because we went, these are national averages or something. So anybody who's following rates know that, you could get something 2.6, 2.5, even 2.5, depending on your specific scenario. And then things went up about, 3/8 to 0.5% on interest rate. This is some sort of national average. So, these are actually a little bit higher than what you'd get on the broker side. But for the sake of this discussion, maybe your credit's not perfect, or you're, for whatever reason, looking at these slightly higher rates. I don't know. I don't want to speak bad on other lenders who might be offering higher rates, but here is the trend over the last, let's call it 8 weeks, right? Mid-February to mid-ish April. Over these last 2 weeks, things have come down. And I'll show you, where did I save that? Give me just a quick second, because I've got real-time pricing to show you. I mean, rates are smoking. Over the last week or two, rates have come down significantly. And here is, anybody who's watched anything on mortgage knows that, the 10-year treasury and mortgage rates kind of track to each other. So as this went up and the 10-year reached 1.75 or so, rates continued to climb. It went from like 1 to 1.75, and rates followed as far as, heading up as the 10-year treasury headed up. Now, this has gone down fairly significantly over the last week or so, from 175 down to 155. Rates have followed. So let me grab, this is a rate sheet too, for anybody who wants to know what a rate sheet looks like, inside the hood of a lender. I'm just going to give you a little peeksy poo inside here. Now, this is a purchase rate sheet, 25% down. Again, I am not offering anything. I'm just simply showing you what the rate sheet looks like and how you can kind of learn about how rates work, right? It's not that you just call somebody up and say, what's your rate? And I say, oh, I've got a 2.125. Well, my 2.125 cost you $13,000 in points on a $300,000 loan. Not the best loan for you, right? So the better question might be, what's a rate that makes sense? And for this scenario, like a 2.845 cost you 0 points, which is known as par, and that might be what best serves you. Depending on your specific scenarios, you can look at paying points. And this line right here, this is paying points. I wonder if I should make this bigger, if it's going to show up itsy bitsy on the YouTubes. But we'll get into here where, check this out. I think this is really interesting. Besides the fact that, like, this is kind of cool that it shows like weekly where the mortgage rates were at. You can see this in the chart, but January, February, we reached lows. And like I said, these were even lower than these lows. This is the national average. The best lenders could get you even better. And they've gone up 0.5%-ish. Here's what I want to jump into real quick, right? 2.38, 2.5, these rates that are being offered by these lenders. And then in that little fine print, 2.8 points. I'll show you how that works. Like, you don't want to pay, sure, I can get you 2.375. Do you want to pay 2.9 points, $8,700 for that rate? The difference between that rate and the rate that cost you nothing will be $1,165. This is just principal and interest, no tax and insurance. But let's call that $75. So you're going to pay $8,712 up front to save $75. 116 months, near 10 years to break even. It's just not feasible, right? It just doesn't make sense. But here's my warning to you. These big fintech lenders have staffed up like mad during 2020 and the beginning of 2021 because rates are low, refinances are high. There's a lot of business to be had, right? If rates start to go up and there's less business available, they just get more aggressive on marketing. I see it and I know it because I personally have mortgages. And so I personally get phone calls. I registered for emails on purpose for market research. And there's certain companies, not even the mortgage companies, but the lending trees, right, that are trying to be a lead aggregator and pull in leads so they can sell them to the lenders, are getting more aggressive. They literally use some of the same headlines. Rates today are this, or even as rates ticked up in February and March, they were using the same verbiage of rates hit this new bottom or something like that. It's annoying, but just be careful of that. This is refinance, which, rates are fairly similar, but I like to show people under the hood because then you understand, like, how do mortgage rates work? Oh, okay. It's not that you call and I go, hey, I've got for you a 2.99 or hey, I've got for you a 2.375. Here's the whole sheet. You've got good credit. You're doing a rate and term refinance. You're not pulling any cash out. Let's look at this. It cost you 0 in points. Let's look at something where maybe you pay what's about 3/4 of a point, and let's figure out if it makes sense. You're going to save $23 a month and spend $2,300 up front. Are you on a fixed budget? Do you really need to save that $23 a month because that's a big deal and this is the house you're going to stay in forever and ever? Maybe we consider that. But in general, something that's going to take you more than 3 or 4 years to recoup cost versus benefit, I'm not going to recommend. So anyhow, that's that. Any questions on that, feel free to give me a ring. This video was more just to talk about what I see happening with rates. Now, the 10-year treasury affects rates, inflation affects rates, and economic factors galore go into what is going to affect interest rates. Here's what I see, and I don't want people to look at, that we've dipped below 3%. No, we're going to continue to go down, and I might be able to get a 2.5% 30-year fixed. If I was getting a mortgage today, I would highly, highly recommend, if you like it, lock it. Inflation numbers, it's almost unanimous. Over the next couple months, we're going to see inflation numbers come out, and inflation is arriving. Inflation is increasing. That is going to pressure mortgage rates and have mortgage rates go up. If the Fed stops buying mortgage-backed securities and they let off the gas a little bit, mortgage rates are going to go up. If the economy starts to churn and people get vaccinated and people are out spending money and all this stuff that's happening that's positive for the economy, rates will go up. There's so many factors that can cause rates to go up, so few factors that could happen that could cause rates go down, that I really see this little blip down in mortgage rates as very short-lived. So I think that while it's great that I get to lock some people in below 3% this week, next week, maybe the week after, I really think it's short-lived. I really think rates will tick up, And everybody who's thought by the end of 221 we're mid threes, 3.75, I see that as well. Again, just some guy on YouTube making a guess. But I would say my advice to people who are out there looking to refinance and or in the process of purchasing a home, if you like it, lock it. Don't gamble. Take it while you got it. We've had a good couple weeks. So let's take advantage. Let's lock. Let's not press our luck. Hopefully this was helpful. Let me know if you have any questions. Matt@mattthemortgageguy.com. If you're in California, I'm happy to help you. If you're outside of California, I'll leave a link below where I can connect you with a great mortgage broker in whatever state you're in. Thanks for watching.